All right, guys, so I had a really big red day. I'm going to say I made $1,500 to learn this in copper. But before we do, let's take a look at how I did in the trades that I made. All right, we can see here Tesla made somewhat of a recovery. I'm up $168. The E-mini S&P 500 went up 113, and then you can see copper here is down $1,400 today. So we'll get into more detail on that and what I learned from it. And then you can see my corn position I closed, and then my wheat position has gone up overall in value. So let's take a look at my positions. Let's see the damage today. So you can see here the trades that I made today. Closed my corn position to free up some more cash like I talked about yesterday. And then I did my regular 30-20-10 strategy, put it there at 30 days. And then I closed my copper position for a big loss. And then I opened my copper position at the next expiration date and made an adjustment there. So let's get into the details on Tesla, and then we'll talk about copper. So overall, it looks like we have a good recovery here from Tesla. We have a bit of a gap to fill after the drop down. That's after we had the market pullback yesterday, and now we can see a push coming back up to fill this gap. And I believe that we're going to stay around this price range until earnings comes out in the middle of April. So I don't expect to see much change here. And like I said, I'm willing to hold on to Tesla until the price goes up and I can close at a 50% profit, because I believe that the price is going to go up. It's just a matter of when, not if. And speaking about the general market, I've got the E-mini S&P 500 right here. We can see that we're still below the 80 MA, but we did have a push up off the 21, which is good to see. It's a green candle. It's a bit of a doji. It's not what I wanted to see, but it is not a bad sign. I mean, we can still have the opportunity to push above the 80 MA and continue on the channel that we've been on for a long time. So that's what I want to see. I think we're going to continue to see that. We want to see this base form and then push to a new high. If it goes below the 21 EMA, we could have some issues there. That might be a red flag. I don't have a game plan for that. My plan is to continue to do the 30-20-10 strategy on the E-mini S&P 500, and my strike price will be adjusted as the price goes down. I'm looking for the 20 delta, so it's going to adjust over time. What I don't want to happen is the price to go down too fast and I end up getting in the money. My plan is to let the options expire worthless, and so let it settle, and then I'll be fine. So as long as the price stays out of the money, my contracts are out of the money, I should be fine. So copper made this huge move, and we saw some huge volatility increases here today, and it went up 13 cents or so. We're up at 421 right now. So I was down a few $100 at the start of the day, and I just kept going up from there. I mean, it just kept going down. So I kept losing money. I thought I could continue. I thought we'd see a correction at some point, some kind of pullback, and it is not letting up. My call was at $4.23, and you can see that it has a high at 423.30. So I'm glad that I went ahead and closed the position at the loss that I was at, and I've lost all the money that I've made on copper. I'm actually in the red. So you can see here, before I was up around $600 year to date, and now on this contract, I'm down $925. Yeah, so with my current contract with copper, I'm down almost $100 now, and that's because the volatility has gone up so much even since when I bought it. So what my plan is here is I've got 55 days until expiration. That's 10 days longer than when I would normally open the position. I'm aiming for 45 days till expiration. I did this at 55 days to expiration just to roll it, just to reposition myself, accept the loss on the current contract that I had, which was a mistake. And I'll tell you why here in just a minute. But then I rolled it into a later time to get a better position and to get a better profit. Now, I don't have much profit because I'm already down 1,000, but with this position, I can expect to make around $1,200 by the time it closes. So I've given myself more time to be right, and I shouldn't have done 30 days to expiration. So this is the $1,500 lesson that I learned today. And that is, don't let volatility increase on you. Because if it goes too high, you are not at a good place. You are in the money, you are red, and there's nothing you can do about it. you have to wait for that volatility to settle. And here's the problem. If you don't have time for your volatility to go back down on your asset, then you are in trouble. And so that's what happened to me. I ran out of time. I manage at 21 days to expiration with copper, and I was at the 22nd day today, and the price went up really high. The volatility went up really high. And whenever I opened the position, the volatility was really low. It was around 68 on the IVR. And now it's up to 100 on the IVR. So I decided to go ahead, cut my loss before it gets worse, and then go ahead, reposition myself at the 55 days. That's the next expiration, in a better position. So that's exactly what I did. And I paid $1,500 for that lesson. So that's the way I'm looking at it. It's a learning lesson for me, and I'm wanting to grow and understand more about it so that I don't make this mistake again. I'm hoping that you can learn as well, and that, hey, volatility can work for you. You definitely don't want it to work against you, because then you're trapped, and now you have to have time to be right. If you don't have that time, you're going to have to take a loss. And that's what happened to me in this case with copper. Now I'm going back to 55 days. I've got plenty of time to be right. And initially, with that position, that's my second position with copper, I opened it at around 30 days. Now I've got plenty of time for this contraction to happen on the implied volatility, and I can collect my money. So with copper specifically now, I know that 68 is a very low IVR right now for copper, and 100 is the highest. So between those IVRs, it's time to open the position at around 90 IVR, and then it's time to close the position at around 68.70. You don't want to be opening a position on copper options or doing a strangle on copper options when the IVR is in the 60-70 range. That's an eye-opener for me. That's something to understand. And what I was thinking at the time was that if we're going to 68 IVR, then we're going to just continue to go down from there. And I was wrong. We actually went right back up to 90 and 100 IVR, and I got caught in a trap. So even though that I'm down $900, I believe that this trade is going to work for me, this new trade that I've opened up, and that I'll be able to collect that money back fairly quickly. We'll see what happens. I want to keep you updated on that. Between copper and Tesla, those are two very big positions in my account. Those are the two big things that are affecting my account right now. I'm down around $1,400 on Tesla right now, and then I just lost around $1,500 on copper. So I think I can make it back fairly quickly, but it has made a huge impact on my account. I'm a new options trader. I'm wanting to get a 50% return by the end of this year. So if you're interested in following me on that journey and learning something along the way, hit that subscribe button and hit the like button if this video was a help to you, and we'll see you in the next video.